This video is brought to you by Jay Powell.
Let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive, and we don't, of course, we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting, a new summary of economic projections, which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
All right, good afternoon, everyone. So as you can see, this is the big news headline for the week, okay? The FOMC hiked interest rate by another 75 basis points. And as you can see, as Powell was starting to get frustrated with the reporters pressing him for answers or a straight answer, he finally gave it. We're not pausing. It's too premature to think about that, or they haven't even discussed it. And you can see the S&P 5 intraday was melting down as he was speaking. So that's a summary of the week, right? Powell, we had a nice rally, but Powell pretty much effectively ended that rally quickly. And as you can see, this was the daily candle on the Qs. Going on Wednesday and Thursday. And yes, we had a little bit of bounce from today's low of 259. So we did break 260 earlier this afternoon, and we regained most of the losses, but we still got a red hammer on the day. But in any case, let me go ahead and pause there. Real quick, if you guys are looking into joining us, please visit therocktrainingco.com. These are some of the best trades that we've had this week. A lot of back and forth. Okay, we were patient leading up to the FOMC to trade that day, and I think those 2 days, last couple of days, really paid off in terms of patience and waiting for the right setup. Of course, the market was very choppy throughout the week, but mostly the week ended red across the indexes. And so we'll take a look at that. We'll see what's going to happen next week, or start looking into next week, because as you know, next week is big, folks. All right. Next week is going to tell us what the Fed may do for December FOMC meeting. Okay. So next Thursday at 8:30 a.m., we do have another set of CPI. All right. CPI is coming out. Last month, October 13th, we came in hotter than expected. It was a forecast of 8.1% CPI year over year. This is not the core, but this is the one that usually track. So it came in a little hotter, and the markets did melt down that day. But guess what, folks? Remember, October 13th was one of the best days on the markets almost on the entire year. Why? Because we gapped down in the morning on the Qs on that day to 254, and it came ravaging, a brutal face ripping rally. And you know that Apple and all the techs just rallied that day. And so the question is, of course, are we going to do the same again? Who knows? But we can only use the charts to analyze. So with that being said, let's go ahead and just jump in. I'm going to start with a simple chart. I'll move back and forth as usual with this chart versus the more of the minute charts and lower time frames, and of course more of my lines, which I do use all the EMAs, etc. So if you're familiar with my trading style, this is my general setup. Okay, so if we start with the weekly, okay, excuse me, let me go ahead and go to the weekly chart here. All right, so you can see that we're getting to a level that's, this is the same levels that we held back in August 2020. Okay, overall, okay, the big grand picture that I see is that we're going to move lower. All right, when that'll happen, I don't know. I do think that major catalysts will eventually come, such as a CPI and more rate hikes going into December. I do feel that the Qs and the SPYs will definitely move lower over the course of, say, the next month or two. Okay, there's no really telling where we're bottoming out, but still, if you're just looking at this weekly chart, we still got the moving average 200 blue line here on your chart that's floating above here, and your SMA 20 line is moving is downward sloping. Okay, so yes, you're going to get those intraday bounces or short-term rallies, but I do feel that given what Powell said this week, I don't think that's a very good. There was no pivot. There was no pivot language, okay, so to speak, as everyone was hoping for, and that's why the market was rallying since that Wall Street Journal article that came out about 2 weeks ago. So part of all this rally, leading up to the event was just because, the market was really looking for any language that we're going to get a pivot. Now, Powell did start the meeting quite dovish, actually, right? If you notice his body language, he was calm, he was cool, he was very controlled. But as the meeting went on with the Q&A, he started giving out, okay, some signals that the market didn't like, and that is no pivot, and that we are there. It's premature, quote unquote, to think about pausing. Okay, so that's kind of the message that Powell is sending. Now, if we go over the daily chart here, once again, this is the chop zone. Okay, if you've been following the Qs and the SPYs, there's a lot of support resistance flips. Okay, so here, let's say back in, for example, right, end of September, we went into this area, it hit some resistance, but we ended up gapping down, and it failed as support. Okay, so back in October 18th, we rallied back towards it, got rejected here. All right, pulled back and then shot right through it, okay, which is very constructive, but that rally quickly ended as well, okay? So we're back below this trend line here. So I would say that going into next week, you're going to see some pops, okay? I think so, because buyers are starting to step in on Amazon, Google, and Apple, okay? And that's going to affect the Qs. I do think next week we're going to hit some type of resistance in the 270s. I think there will be some type of FOMC rally, okay, in anticipation for a cooled off reading, perhaps. In my opinion, I don't think that's the case. I think we're going to see a hotter CPI print. All right, but the market's going to speculate. So I'm going to say that the upside target going into FOMC or next week is going to be about the 273 to 275 range. We're going to retest, okay, this area here. All right, and it's a resistance. It used to be support, now it's going to be resistance. So if that area hit, then I do think we're going to pull back. And once that CPI print comes in hot, then I do think that we're going to eventually come back down. All right. Based on what the charters tell me, I still think that the 254 yearly lows is going to crack. Okay. It may be next week. It could be the following week. Who knows? However, this particular CPI is important because it really is going to tell you what the Feds are going to do in December. So upside target 273. I'm still going to keep a downside target 254. I do think we move up. Volume was pretty good today, actually. Okay, and I'll show you the Apple chart in a second and why I think that we're bouncing here. But we're going to move up into this line, and I do think we're going to come back down and test the lows of the year. Okay, so is this now there is a little bit of wild card. Okay, next week we do obviously have the elections. Okay, which is Tuesday, so it might be pertinent to actually buy some calls on Tuesday for the run up. All right, because if the Republicans retake the House, all right, which everyone's mostly speculating at this point, then I think you see kind of a pop in the market, right? Some change in the market or some change in the direction of the country might set us up for some type of rally. But as you know, if you're part of TRT, we just trade the day. Whatever macros, whatever's going on in the world, we worry about it after the bell. All right. So with that, let's go ahead and go back to this chart here. So once again, this area's got to hold for the Qs. All right. If this area does not hold, then look, you don't have a ton of volume until 220. Okay. You have some gaps here that is going to act like just waterfall if we actually end up breaking this area. So look for that 220 level. I do think long term, in at least the next several months, you're going to see more new lows on the market. I just don't think we're quite there yet to stage any type of counter trend rally or that the bottom is in. It's really too early or premature to think along those terms. Okay, so let's go ahead and I'm going to go back to the daily chart here. And let's go look at Apple and what happened today on Friday. So Apple, over the course of the week, Apple, Amazon, Google, Meta just took it to the chin. All right. This goes back to my theory about the future of S&P 500. All right. The future of SP 500 is not going to be heavily focused on tech. All right. I do think at some point in the next year or so, things are going to change and start moving into energy. All right. So we're seeing a kind of this waterfall, right? This dumping on Apple this week. But guess what, folks? We dumped down to exactly the lows of October 13th, the same day the CPI came out with the hotter reading, and people bought it up. All right. So the 134 weekly target for for Apple actually hit if you watched last weekend's video. All right. So we hit that. And then we also hit the 141.60 mark in terms of the downside from the beginning of the week. All right. And this even hit as well. So during the intraday, when the market started reversing, you're getting this long wick. Okay. A lot of buying coming into Apple for a double bottom play. All right. So I think that's primarily the reason for most of the volume that occurred just now. All right. Or this afternoon. But it's not enough for anyone to say, well, okay, we're going to rally from this point. We saw how Apple rallied here. We saw how Apple rallied here after earnings, okay, and gave it all up within 2.5 days. This candlestick was wiped out by these two candlesticks, okay? That's not good sign for the market. It does point, obviously, to a lot of volatility in the market, okay? But if we go ahead and move to the weekly, right? This doesn't look good. This symmetrical triangle is about to break down. All right. And it's not going to take very much for this to break down. We have a support here about a 134, and that's exactly where we bounced off from. All right. So I do expect, obviously, if we're not gonna rally at all next week, with the CPI, I do think we're going to move up a little bit. I do think it's not going to go much further. I think we're going to get a bunch of doji days next week. Okay. Maybe we're going to get stuck in a range. But this doesn't look good from a weekly perspective. Okay. So we did reject SMA 20 on the weekly and also the moving average 200 on the weekly. Reject here, signaling potentially more downside. Okay. So that's Apple. Let's go ahead and go over to Tesla, which almost looks like Apple's chart, right? The same type of triangle setup, rejected once again here. Same thing, there's the news with Elon and all that's over. But Tesla, for the most part, just follows the market. Okay. But let's see. Here, I do think Tesla, right, with the rest of the market, it could squeeze. Certainly, it's been having a tragic week. Okay. This SMA 20 on a daily here is going to get tested. I do think that Tesla is going to move up to 218 level because it tried that yesterday, failed, and it actually opened. We opened above it at 222 and got severely rejected and closed at 207 on the day. All right. So there's going to be that retest, but I think weeks down the road, all right, I think after CPI print is hot, I do think we're going to move right back down to retest 200 level or 199, 200 level. Okay. Upside target 218, 199 for Tesla going into next week. All right. Let's go ahead and look at Amazon. All right. We have to look at Amazon. Amazon actually ended the day okay, right? It actually made a new low. All right. You have consecutive lows. Not looking good either, but I would say that, hey, we're going to move up a little bit next week. On this downfall here, you're starting to notice the volume drop off too. Okay, so the selling volume is at least on Amazon is starting to show itself. Okay, so I do think that we're going to move up towards the 97 mark on Amazon going into next week. Let's talk about Google real quick here. All right, Google was the one that actually outperformed today. All right, Google has a little bit of gap to about $87. Okay, so the gap actually did not fill, but you got a green hammer on the day, but lower volume. So I have to be careful with that. But if the tech sector really is going to rally and the dip buyers are coming in to rescue Google, I think Google at this rate, at this point, with this kind of price, I think it's a discount. So I'm going to put an upside target here of $90 next week for Google. But again, a lot's going to depend on what the CPI suggests. If we do break down, I think you're going to see another new low of the year below $83 on Google. All right. Quite a week. I think we had quite the week all around. There's just these catalyst events. The market is so driven by it. Okay, we're just going to continue, at least for the rest of the year, to be dependent on catalysts, jobless data. Okay, claims, all right, new home sales, pending home sales, all these data points. And guess what, folks? There's going to be a lot of speakers. If you look at the investing.com economic calendar for next week, we have a ton of Fed speakers coming in now that the blackout period is over. All right, let's look at a little bit at the hourly time frames. Okay, so if you're part of TRT, we talked about this today. All right, this morning as part of the pre-market prep, we covered this gap. All right, this gap here dating back to October 14th. All right, and as long as the price action stays within this green box, which is pretty much 265, 266, and 262, we're going to chop around a bit. Okay, we lost the support. This zone became a resistance for quite some time over the course of today, but we bounced right back into it. Okay, so you definitely have buyers at the 260 level, and we've seen this before back in early October. Okay, when we were chopping around this area 260 before the final big drop. All right. Here we're doing it once again. So you're going to see markets trying to lift everything up, buying the cheap Apple shares. Okay, if you consider it cheap. I do think we're going to move up a little bit, but I do think we're going to get also shot down once again. This morning, we mentioned on our live stream that 265, 266 may get rejected because we're stuck in this area here. And it did, right? We got rejected pretty hard, but we're right back into it. So that tells you, going into next week, yes, there will be pops, but I also think eventually there's going to be more downside and that this bounce is really sustainable. So that's my forecast, all right, going into next week. So once again, on the cues, I do, we're going to move into this channel, but I do think it's going to do one of these things, right, where it's going to move up, all right, try to tag the SMA 20, all right, hit this green zone, and we're going to chop around a little bit, but I do feel, all right, that the CPI print may send us lower into a new low for the year on the Q. All right. Looking at the stochastics, if you're following the stochastics and CCI, this here is turning up a little bit, which is bullish. Okay. But not quite there. It's not giving us the bull signal quite yet. Okay. But this one that, remember, I talked on the video last week, is that when the stochastics leading up to major economic events are overbought in these conditions, it generally is going to dump. Okay. And once it dumps, it's got to reset. So we do see that stochastics are starting to get oversold. Okay. At least on the daily. All right. Which should start curling around if we get that move back up. If we look at the weekly chart here, all right, this is starting to move up, but guess what, folks? You got kind of a divergence here. This is moving up. This is actually moving down. All right, we made a new low here, and this is actually moving down as well. All right, at least on the weekly. So that to me is definitely throwing up a lot of mixed signals. I talked about a death cross on the weekly chart last week or over the weekend. A lot of people disagreed with it. Whatever, but guess what, folks? The SPY closed red this week. All right, and that's a very telltale sign when you have a death cross on the 50, 100, or if you use the 50 and 200 moving averages. Higher volumes today on this week on the sell side. The CCI is starting to move down as well. So the SPY did have a very nice intraday bounce. So now you have this kind of a dragonfly doji on the weekly here, but we're still kind of lacking in volume. All right. With that being said, I think I'm done here. That's the update for the week. again, next week is going to be pretty big, right? It's going to be a lot of volatility. I think, like I said, a lot of chop and beat back and forth, waiting for the data. All right. And we've seen this before where the market just consolidates within a range, waiting for the data. I do think, all right, if I were to give some type of forecast or prediction, I do think we're going to see 8.5% again on the CPI. All right. And if that happens, if it's that high, I do think eventually the Qs is going to meet my target of 254 going into next week.